Welcome back to Alpha Recap, where we break down the market headlines you need to know. It's Jordan here, and with me is Josh, our calm market historian. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Thanks for having me.
Quick note up front. U.S. markets were closed on Friday for Juneteenth, so the market action we're talking about today happened before the holiday or in news flow while markets were closed. We'll be speaking in past tense about what happened. Sound good?
Perfect. That holiday pause actually shaped a lot of the headlines.
Let's jump into the top stories. First up, a customs ruling cleared a short-term supply risk for STIIIZY. Josh, tell us what happened and why that matters.
Sure. U.S. Customs and Border Protection ruled that STIIIZY batteries paired with redesigned pods did not infringe a competitor's patent. In plain English, the customs agency allowed those imports to proceed, which removes an immediate enforcement threat at the border and limits near-term supply disruption.
So inventories in transit could clear instead of getting stuck at customs.
Exactly. That operational win reduces a binary downside risk tied to border enforcement. Now, courts or appeals could change things later, so it's not permanently closed, but for the short term, it removed a big drag on distribution channels.
Right, so the headline eased immediate supply worries. But we still should watch for follow-ups, company statements, or appeals over the weekend that might reopen the topic on Monday.
And remember, rulings like that can change order books and logistics plans quickly when markets reopen.
Okay, next headline. An economic corridor report linking Georgia and Israel, valued at about $5.4 billion. That one was interesting. What's the gist?
A 5-week research piece outlined a multi-billion-dollar economic corridor between Georgia and Israel, and it named a pipeline of more than 50 companies that could drive partnerships or M&A activity. The note specifically mentioned big Atlanta anchors like Coca-Cola, Southern Company, and Delta as potential beneficiaries of supply chain ties or joint ventures.
So this is a strategic, long-term play, not an immediate earnings event.
Exactly. It's the kind of regional industrial planning that can set the stage for deals, procurement arrangements, and multi-decade supply relationships. The immediate market impact is limited, but it's a theme worth tracking for M&A flow and corporate partnerships.
Got it. Now the tech slice. Remote People launched an AI product called Command Center that actually executes HR and employer of record actions across more than 180 countries. That felt like a real step forward.
It did. Remote People moved the needle from advisory AI, chat and suggestions, to execution AI. Command Center can trigger operational actions like salary changes, onboarding, and even terminations across a huge global footprint. That's a structural development in global payroll and compliance.
Which means this could pressure incumbents or change pricing dynamics for vendors who manually handle that work.
Right. Execution-level automation can speed onboarding and cut labor costs. For public companies in adjacent spaces, analysts will be watching for partnership announcements, customer case studies, and any pricing disclosures that hint at revenue or margin impacts.
Early adopters could get faster setups. Competitors might move to respond with similar features or new contract terms.
Yeah, absolutely. And from a market perspective, these product launches can shift competitive dynamics over quarters, not days.
We touched on legal timelines earlier. 2 class action reminders went out for Vera and Poet Technologies, with deadlines in late June and early August. How should listeners interpret those notices?
Those notices are procedural. They remind potential claimants about deadlines. They don't mean a settlement or judgment is imminent, but they do concentrate legal activity into discrete windows. Analysts note that these timelines provide inputs for damage calculations, but outcomes typically unfold over months. So these add event risk and could produce headlines that move stock prices when markets reopen.
Understood. So legal deadlines equal possible volatility, but not necessarily immediate financial impact.
Correct. It's a contrast with something like the STIIIZY customs win, which removed a near-term operational risk. Legal matters tend to be more open-ended.
Okay, shifting gears to retail and the seasonal stuff. We had early Prime Day promotions, and Amazon had traded up into the holiday, closing around $245 on Thursday. What should we watch?
Retailers like XP Pen announced discounts ahead of Prime Day, up to 35% off on some drawing tablets. Promotions can lift unit sales, but compress gross margins. So the big data point will be post-event sales and margin disclosures. For Amazon, Analysts will piece together ad spend, logistics capacity, and early order trends to update guidance.
So expect earnings or guidance chatter after Prime Day that could move e-commerce and supplier names.
Absolutely. Early promotions are a little like forward guidance. They give you color on volume and pricing trade-offs.
Quick reaction segment. Right.
Yeah, that tracks.
Let's talk about healthcare briefly. Tampa General opened a partial hospitalization program for behavioral health, and Seoul National University Hospital said it wants to expand K-Bio's global push at BioUSA next year.
Both are strategic capacity moves. Tampa General's program is operational expansion that will only translate to revenue if utilization and payer mixes follow. And the Seoul National University Hospital note is a signal ahead of BioUSA, where licensing or partnership announcements could be catalysts for Korea-focused biotech names.
So those stories matter more for medium-term positioning than immediate earnings beats.
Exactly. Investors should watch for concrete data, patient volumes or licensing terms that turn strategy into measurable outcomes.
Defense and contracting. There was an IDIQ award to a supplier for diesel engine parts to the Navy's Military Sealift Command. How do investors usually treat those?
IDIQ awards mean the vendor is on a roster to receive task orders. The real revenue shows up when the first task order is issued and we see dollar figures. So it's optionality and a potential future backlog source, but not immediate revenue until details come through.
Makes sense. On corporate actions, LHV Group was quietly buying back shares on NASDAQ Talon, and Aben Gold did a small private placement for exploration. Two different capital allocation stories.
Right. Buybacks show surplus cash deployment and can support per-share metrics. Small private placements for juniors extend runway but don't eliminate drill result risk. Both are signals about priorities, returning capital versus funding exploration.
Crypto and ETFs had some movement before the holiday. The crypto-linked ETF that tracks Bitcoin futures slipped about 2% to $8.55 on heavy volume, about 322 million shares. And another ETF fell roughly 3.5% to about $185 on heavy turnover. What's the pattern here?
Pre-holiday heavy volume and price slips suggest elevated liquidity and headline sensitivity. When flows are large and a holiday is coming, you can get concentrated positioning and then potential gap risk when markets reopen. Also, token projects like Meme Toro repositioned a token toward behavioral finance narratives. That's more of a product story than a price story for now.
So watch those ETFs and token updates when markets reopen Monday.
Yes, volume was heavy into the holiday, which raises the chance of gaps or quick repricing on the reopen.
Let's zoom out. We saw several cross-cutting themes in today's briefs. Walk me through the big takeaways.
Sure. Number one, the holiday compressed price discovery. A lot of announcements landed while markets were closed, so we should expect pent-up order flow and possibly outsized moves when trading resumed on Monday. Number two, operational resilience versus legal risk. The customs clearance for STIIIZY removed a near-term operational threat, while class action deadlines for other companies concentrated litigation risk into clear windows. Number three, execution-level AI is arriving. Remote People's product is part of a trend where AI actually executes tasks, not just advises. And number four, strategic corridors like the Georgia-Israel plan are long-term industrial plays that could catalyze partnerships and M&A.
Good summary. Any short-term items listeners should keep on their radar for Monday?
Yes. Watch for any weekend legal filings or company statements tied to those class actions. Any customs follow-ups on the STIIIZY ruling, initial Prime Day figures or retailer commentary, the first task order on that Navy IDIQ, and volume and price action for the ETFs that printed heavy pre-holiday turnover.
And what about remote people? What's the practical thing to track there?
Track customer announcements, partnership deals, or case studies that quantify adoption and pricing. Those will tell you whether the product is a niche efficiency play or something that meaningfully shifts the market structure for global payroll and EOR services.
Quick reactions again.
Honestly, I was a bit surprised by this one.
Right.
So what really stands out here is the holiday effect.
Final takeaways before we close?
1. Holiday gaps are real. News that landed on a market holiday can create outsized moves when trading resumes. 2. Operational rulings, like the customs clearance, can remove immediate downside risk and ease supply chains. 3. Legal deadlines compress event risk into clear windows. Monitor filings. 4. AI moving from advice to action is a structural theme that could reshape vendor economics in HR and payroll. And 5. Strategic regional corridors and early retail promotions are both slower burn stories with event-driven checkpoints you'll want to follow.
Great! Quick reminder, this episode is informational only. We're not recommending buying, selling, or holding any security or giving personalized investment advice. Analysts note patterns and data points. Listeners should consult licensed advisors and do their own due diligence.
Exactly. We're pointing to market implications and what to watch, not telling anyone what to do.
All right, that's a wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.
Thanks, everyone. See you next time.